Hello guys, so welcome back to the section 2 of our price action support and resistance course. Alright, so in this section we'll be looking at how to draw trend line support and resistance. So drawing trend line support and resistance. So first of all, we want to understand the concept first. So in the previous video we spoke about support and resistance level, marking out the levels horizontally. So now we want to incorporate trend line into the marking out of the zones, right? It will add good confluences to our trade, and it will make our confluences tangible. Okay, so first of all, we want to understand the concept. So understanding the concept support, support, like we explained, is a level where a downtrend pause due to the demand of buyers stepping in. And as well, resistance is a level where an uptrend tend to pause a resistive level of price from going up due to the supply, that is the selling pressure in the market. So now, what is trend line? A trend line is a diagonal line that connects a series of higher lows. That is for an uptrend now. So you can have a uptrend or a downtrend. So it connects a series of higher lows or lower highs. So lower highs downtrend, higher lows uptrend to visually show the market direction. As simple as that. So now, looking at this, what is a trend line? It's a diagonal line that connects a series of higher lows. So come here, we can see series of higher lows. So when we connect this is what is a diagonal line connecting series of, this one now is what, this one is higher low, so this was uptrend. So, and as well, if I should connect this down lower lows, so maybe if I should connect this down, okay, let me look for a neat one. So you can see this one now. This is what, this is lower highs. So now you can see there's a diagonal line. So trend line, this is the tool, this is what we call trend line. It's a diagonal line. You can draw it to any point, from any point, 360 it can turn. So this is a trend line, so take note of this. So now, drawing support and resistance, which you know about support and resistance, that is where price bounce multiple times, and when a support is broken it becomes a resistance, and when a resistance is broken it becomes a support. So the same for resistance and support as well. So now, what are we into? We are concerned about drawing trend line. So now, for uptrend, this is what we pay attention to. We connect two or more higher lows. So first of all, it must be two, right? It must be two. Connecting two or more higher lows, that is swing lows. So coming here now, you saw the way I connected this one. This is what, this is a low. Okay, from here, this is a higher low, and then okay, market has not formed any higher low here at this point. So but this is a higher low. So now this is what, this is a trend line connecting these two higher lows, and it makes sense, right? So first of all, connect two or more higher lows, swing lows. Yeah. So the second one is use the bottom of the candle wicks. So pay attention to this now. This is where you want to stop specific. To use the bottom of the candle wicks. So now, if we are using the bottom of the candle wicks, you want to be precise with this. I want to be precise with this. You get the point? So you can see now, this is just at the base, this is just at the wick. So at some point you might not get the trend very clear exactly. So maybe if I should connect this one, so this is the wick now. If I should connect this one, you can see this is the wick. See the point? So use the bottom of the candle wicks. If you connect this like this is the wicks. So now you do now anticipate a good breakout from this zone. So you connect from the candle wicks, not the body, because The truth is that the wick is also indication of price reaction, because if you should neglect the wick, maybe if you are in this position and you are just using candle body for your trading, if a wick should go to your SL, automatically you will be liquidated from that position, right? So you want to factor out in everything. Like now, this you can call this manipulation, you can call this manipulation. If this should go to the SL, normally you'll be off from this market. So it is good you factor this into your analysis. So you want to connect the candle wicks if price respected those areas appropriately. So first, you're looking at higher highs and higher lows, swing highs or swing lows. So you use the bottom of the candle wicks. Yeah, so for uptrend to be like this, you get the point. For uptrend it will be like this. Then for downtrend, it's a resistive line that market reacted. It will be below the line, and for uptrend it will be above the line. So take note of that. So now extend the line forward. So the reason why we are drawing this is to see how price will react at this line in the future. As simple as that. So with this now, at least you know how to draw trend line. So let's get some other information. So the same for downtrend, you connect two or more lower highs now this time. So lower highs, this is a high, this is a lower high, and this is a lower high. So but now this cannot be within this trend. You see it cuts from the body. So what do we say? We say we connect the wicks. So now me connecting this wick, this is what I want to do, and then I will now watch and see what price will do in the future. Then you see now, then I know that okay, this is a breakout. So you saw this market wanted to react from this trend line, but then after this it gather momentum up and it pull up, right? So this is what you want to be doing. So now I can do example and another example from here. So maybe if I connect this from the week, so you can see this point. So now this is it. You want to connect two realistic points. Want to connect two realistic points. So you see this is too awkward. So maybe I can use this instead. Can use this. So this is what this is: a low, higher low, a higher low, right? And it's a base. You see market reacted firstly from this point, came back to this trend, bounce off, and then so this was a breakout. Then maybe you can use it for your analysis of some kind. Okay, so you just that's what you just use Trendline to do basically. And now I'm doing this using the 1 to 3 frame. If I shift to the 1 month time frame, you will also see a price action as well. So you can see this price action. So that you see that this one is almost perfectly. So now see drawing this now. So now notice I want to cap my levels of interest. So now see now this time now I did not put it at the week. I did not just put it, I did not just put it at this point and extend it, because it is not realistic. I did not just put it at this point and extend it, you understand? But what did I I not just put it at this point, extend it, because this is too far, but then I try to bring it close to the market current price, which how many touch now? 1 touch, 2 touch, 3 touch, and 4 touch. And it makes sense that this is a breakout now. I don't know if I'm communicating. It makes sense that this is a breakout. So this is a downtrend. Looking at this trend, I know that this market is a downtrend, right? It's a downtrend because it is at beating lower highs and lower lows consistently, lower highs and lower lows, except for this breakout now. So you can see the way we are using our trend line. So let's go back. So extend to the future. So the angle should not be too steep. If it is, the trend might not be sustainable. So like I said, the angle might not be too steep, like maybe doing it like this, it does not make any sense. Rather bring it to current market price. Yeah. Okay, so now what do we use this for? You check if the trend line or zone aligns with a key price level. Check if it's aligned with the key price level, that is previous highs or lows of Fibonacci zone. Then trend lines works best with confluences. As simple as that. It works with confluences. So what is confluence? Confluence gives you a reason to enter a trade. For you to take a trade, you need to consider more confluences, not just one confluence, right? Maybe first confluence is to see that market has maybe market sweep liquidity or liquidity hunt. That is first confluence. Second confluence is for you to get a break of structure, change direction to the opposite side. Second confluence. Third confluence is for you to wait for a retest. All of those, they are confluences, and which now trendline work with confluences like moving average or supply and demand zone. But now we will remove forget about moving average. Maybe we'll look at it in more complex, advanced tools we use in trading. But let's just be focused on trendline now. So now this is the last part now before we go into the practicals. We use higher time frame first. So now me coming to this chart, it will make much sense for me to use the higher time frame like 1 month to draw this trend line before now going to time frame like 4 hour to draw the trend line, because in the now we can see that this is a bearish market. 4 hours, if 4 hours is indicating a bullish market, I can call that a counter trend reaction, because it's counter trend because the overall market is telling me that it is bearish, and now I'm seeing bullish in the 4 hour. I just know that okay, that might be a correction in the bigger picture. And you can just position yourself depending on your support levels and your resistance level to catch good trade setup as well. So you want to start from the higher time frame. If you're a day trader, you want to start from 1 day 4 hour chart to identify your levels, and then refine on the lower time frame for precision entry. That is if you're a day trader. If you're a swing trader, you know what to do. Start from 1 month, 1 week, 1 day, and then use 4 hours, 1 hour for your entry, right? So now let's do practice. So how do we draw trend line? So first, I like to get good reaction of price from good support and resistance zone, like swing highs, swing lows, and ultimately the direction of the flow of the market. So now you can see that this is a bearish market has been selling. So now for me to just have this view more accurately, or at some point, where you just have good candlesticks reaction, I can flip this up using the line chart. So using my line chart, you can see I will draw to some extent you know accurate reaction. So now you can see this now. What this means is just indicating the volume, forgetting the wicks. Wicks are rejected prices, so this is just the body of this candle. This is where the body stopped. So now you can see now, if I should flip this up, so that this was a breakout, false breakout, and then market failed to break, and now you are watching at this, you are seeing that okay, market is trying to break out, and then it will give you much confidence. You see the way I drew this. This was the 1 month, you know so it's giving us a good clear view. So that if I change this now to the candlestick, you see that okay, this was a breakout. Then maybe you see that one gave us a kind of precise trend line, you see, exact. So maybe now me seeing it from this weekly, from the weeks, I can now adjust this a little bit. You can see now, then this makes sense as well. Just adjust this, and then you see it's still my trend line. You see, now I cannot call this a false breakout because now it respected the trend, respected the trend, and now this is, maybe if this candle should close, which is closing already tomorrow, this 1 month candle will be closing, and then I can call this a kind of breakout. And then we can add this with our other conferences. Remember when we were talking about horizontal, marking out our zones. So this is a resistance zone. A resistance broken, it becomes what? A support. So this is what we are expecting, that if market should really break out from this zone, this is what might happen. It might break out higher to maybe this point, and then maybe suddenly it might come back to retest. After the retest, now what do you get? You get another movement to the next resistance zone, and which this is the resistance zone. So you can see now we are adding things in perspective. We have added zone to this now, added zone to this, and now we have added our trend line. First we are seeing this, so you can see that this zone was the confluence zone. If we should check the lower time frame, you see that this zone was market consolidated around that point. Why? Because it was a confluence zone. So now you can see at this zone, see there was some kind of rejection multiple times. So see at this point, see this rejection, all of this, and before then you saw this breakout, good breakout, and market is still around this zone. So we expect something like this and like this to this next target, next point of interest. So now this is how we mix our trend line and our trend line and you know and our zones, that is our support zone, horizontal support zone, together to give us good confluence reaction, good confluence validation. Yes, so now this is the 1 month. So let's assume, let's just do a little back test. Let's back test maybe from this point. So let me go ahead to tilt everything. So now we are incorporating trend line. So first of all, now you see, maybe if I should start from the monthly, can mark this, that okay, market has expected this, and this is a downtrend. And now I mark this again as well. This is what a support was broken, it becomes a resistance. So now at this zone, I'm expecting market to react at this point. But now maybe because of this trend line, now I know that okay, somehow market might react up to this point before this will be completed, and then before it will maybe drop to the next support. So with this now, I'm going to use the fib tool. Okay, I can just use the fib tool, measure from here to this point, and see now. So this is 50%. Okay, see this line was below 50%. This support, which was broken to become a resistance now for current price, it was below 50%. So based on this now, see 50%. So based on this now, I will expect that okay, it is good, and let me say it is healthy for price for you to catch a market that has retraced above 50%. If you count this market at this point, reacted from here at this point below 50%, it might likely be an inducement. You catch inducement to go back to hunt your stop loss. But then if you wait for maybe 50% and more, you likely catch good trade setups. So now when market tap this line, this is a confluence zone. We want to wait for market to come to this zone, and then we are waiting for the next action to take, right? So this is the projection, come to this zone, and then we might take you down to this point. So this is the higher time frame. So now we come to the weekly. We want to see how we can incorporate this, like how we can incorporate this. So this is the weekly, so we can see this. So all of this now we can mark it as a zone. I can just use this and mark this and just say I'm just waiting for breakout whichever way, but let's not make the chart too dirty. I can use this, I can mark this from here. Okay, I can mark this like this so that this makes sense. This was a base and kind of base, and then maybe I can mark this at this point for a kind of breakout here. This is a resistance, this is a support, and then this is my trend line, right? This is my counter trend line, countering the overall trend, which is bearish. So now I just need to watch for reaction. This is my base, remember. So maybe like this now, this is 1 week, and now shift it down to the daily time frame. So what are you saying? You can see that we have some kind of zones. We have another trend. Okay, see, first of all, the 1 month is telling us that we are bearish, right? And the 1 week is telling us that we are trying to buy to correct the move, to retrace to this point. And now the daily is telling us different thing. You can see the trend in the daily, right? You can just see it for yourself. So what do you see now? This was a high, this was a lower high, lower high, lower high, lower high. So now this is a kind of trend. So now we are adding trend. So I can now draw this trend line. So let's see which one will be accurate. So that's why I say that. So you see, this one was not inclusive. So maybe I can change this first to line, and then maybe I draw this now more, okay, I draw this like this, then change it back. So you can see now this body. So you see that this makes sense to some extent now. Resistant, 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 right? So now this is a trend, and as well this is a trend. So this is what now, this is supporting it, this is a support, this is a resistance. So whichever way, if market should break this, it's telling us that market might likely head to this, and whichever way, if market should break this, telling us that market will likely head to this first. You get the point? So now putting this, now we can add our horizontal, we can add this here, that this is a point. So if market get to a kind of point like this, like that this is an indecision point, because of what? Because of this, see all of this now, because of this red line, and as well this confluence zone as well. So but now this is one day, so I don't want to go ahead to add another trend here. Let's not make the chart look nasty. I might just add another one like this. So this can even do it in a lower time frame. Okay, let's just say we add it, and let's see how market will react to this. So now you can see, what do you notice? First trend line within has been broken and retested at the same time. So maybe a trader trading the lower time frame might even consider taking this trade for itself. Let's just do this for practice, and then TP at this zone. So now what happened? Market is so as market reacted at this trend line. See as market just reacted at this trend line, being reacted. So for a trader that is very conservative, that focus on quality, we not want to just see only this confirmation, delete this, we want to see a breakout from this. So let's see how it goes. So you can see now, so after this breakout from this trader might likely wait for retest, and which maybe the retest might not happen, it might later happen. And then see, this is a base. See as market just relax at this point, and then let's play it and see. So now what do you observe? You observe that market has finally broken through. So now what happened? Market has broken this first trend line. Okay, broken this one, it broke this one. So the trader here is in this trade taking partials for me, and maybe the next target will be around this point, because you don't want to target this point, maybe around this point, somewhere here, no, somewhere here like this, next target. So now if this is a breakout, you wait for a test, and maybe this is a kind of retest, or maybe my retest a little bit to this point. But then for us to know a kind of retest, you can bring your trend line again, and then okay, marking this to be far. So maybe you just mark this. So maybe I can delete this now. So now you can see the way I'm drawing this now. So this was broken, and this trader is already in this trade, driving it down. So now let's play it and see. So you can see now what happened. Now from this point, market broke into this channel back, but now this trader that waited for breakout from this channel is waiting for retest at this trend line. As simple as that. To what? To catch sales because of this breakout and this breakout from this zone. And it made sense that market did not consolidate around this point, but it broke to some extent down. This was what held it, and then it has come back. So this trader now want to wait. Is market going to give him good entries at this point for him to take sales? But he's waiting to see if this trend line will really hold, because now when the resistance is broken, it becomes a support. When the trend line is broken, a support trend line is broken, it becomes a resistance. So let's just see what happened. So you can see what happened at that point. So this trader is waiting. So now he saw this rejection, it made sense, right? And now you now see this kind of whip. So this is the daily time frame. Maybe this might be due to NFP. Let's see. Okay, Wednesday, maybe CPI or so. So maybe this trader, because of CPI or NFP, is not a news trader. He's going to wait, right? But now this is a good retest. This is wonderful retest. And mind you, we were having a kind of trend line at this point. So now this is double validation. He rejected at this trend line, and as well this one is meeting, and as well you have this as well. So you can see the confluence is too much. So this is what you need to enter a trade. See this reaction at this point. This is stop loss hunt, honestly. So this now reacted at this point is good. You see, first resistance was broke, support was broken, it becomes resistance. So first, now this was a retest zone, this channel, now this trend line was another retest zone, and this one again. But then this one does not make much sense, but it makes sense as well because he failed to break it. So now this trader might have taken this trade maybe in the lower time frame somewhere here, and stop loss would have been here, and maybe he's heading down to this point. and maybe this one again, maybe it's heading down again as well. So you can see, so now you are adding other confirmation. So you can see your TP has hit, as simple as that. So just notice now, it reacted at this point sharply. Sometimes that is why you don't need to be greedy putting your TP at this tip. I hate putting my TP at this tip. You can just put it here so that you know hear that market did not activate you in your TP just because of some few pips and then you reverse 100%. It's not a good place to be. So now see, what have we gotten? We have gotten our market has come to this support. So what do we need to do? We wait. You see that now the confluences are making sense. You see trend line breaking, and you see the retest was just happening nicely, and stuffs like that. So now I can go ahead and delete this one and mark out new trend support and resistance. So now this market has come back to this zone. I want to wait because this is a support. Is market breaking through this support? Then I will know that okay, maybe I'm trying to catch sales, or is market trying to pull back with momentum upward. So now I continue playing this. Let me see the reaction. So you can see the market is consolidating at this point. So you can call this what now? This zone that was this zone now. This zone that was broken. It retested this zone, and that means market want to sell. But let's wait and see market to break out from this zone. Continue playing, and then you can see that is like a breakout. 1 week, that's like a breakout. But let's wait for the next candle to close again and see. So you can see, because why? Because this is a major support. So you need to wait. Maybe if it's something like this within this, you can take, but this is the major support. So now you see that this was a kind of fake out, but it might still sell. But let's just see, because of this reaction, another is a fake out. Because normally the higher time frame is telling us that market want to buy to correct this move, because market has been selling. So this is the motive about market. You see, market will trend. Market will not always be trending. Market will not always be trending. Anytime you see big move like this, check if this happen in 6 months, market might consolidate for another 8 months or even 1 year. So just know that, have that in the back of your mind. So you are just waiting. You don't want to just catch swings move. You just cut this move and you are very greedy, you want to catch another move again. Rather, you need to be patient, right? Yes, you need to be patient. Like you see now, market swing up, swing down, swing up, swing down. But you see this one, you need to wait. This is a consolidating market now. So now from this point, this is a support. This is like a triple bottom. So we look at it from the 1 week. Let's see what is happening. So now like this, now I can see a kind of trend. So if I connect here, you see I can see this trend. Just first of all, I can just see this trend, maybe in the daily time frame. So you can see that this trend, okay, it's making sense to some extent. I can see this momentum, but then this is still in the base. Market can still drop down, right? So I'm still waiting. This now is a good zone for me to wait for breakout confirmation. This zone, I might just mark this zone to wait, but if market breaks out from this zone, then I can construct, depending on the kind of trader I am. If I'm a day trader, I might even use this as an opportunity, try to catch buys right from this point, because except market breaks this trend. So now market has broken this is a kind of retest. Another trader has bought this market already and sell at this low, and then targeting where the next point of resistance. I might target here, but maybe take partials at this point, but targeting here. So okay, let's just say this now. So now, but another trader is waiting for a breakout from here to be very precise in his trade. So let's see what happened. So now you have gotten the breakout. So you see now, this is a touch, this is a touch, and this almost look like a touch. So now market has not broken this line to tell you that you want to sell. You are good. Breakout, and then maybe now this trader that is waiting for breakout might now comfortably enter this market now at this retest. Breakout from this zone, retest, and sell maybe at this week. Now see this week, instead of this one, then maybe taking it to this point again, right? So let's see how it goes. But now watch at this zone. This level is a good level. If this should be taken out, because okay, it might be taken out because it might be taken out. So notice again, see this trend, one, two, see this touch now. So let's watch if this is going to break it. If you break it, that means you see it did not break it. So what happened now? Market came to this point, rejected, and then pull up. So let's watch, was there a breakout? So look at this now, there was a kind of breakout from this zone. So remember, this was a kind of resistance. This point now is a resistance zone. That is why you see this reaction at this point. This is a resistance zone. This is why you see this reaction. So maybe you might think that market want to do something like continue the selling, but this is what you need to watch out for. This is what you need to watch out for. If you extend this like this, okay, this is what you need to watch out for. So looking at this now, you look at this from the higher time frame, because from the higher time frame now, you see that market want to correct. Market reacted from a base, and market has reacted, retested before and dropped, and now pulling with this momentum. So this is 1 week, right? So you want to wait for that 1 week to close. You want to wait for this candle to close and see the reaction from this candle. So now you can see, first of all, it broke your trend line, no doubt. You're supposed to panic, broke your trend line. So let's see how the next candle will close. Then let's see if it will break this low. If you break this low, then we are wrong on this trade. If it breaks this low down, then we are wrong on this trade. But now it just reacted at this point. So let's see if it will close below or it will continue higher. If it close below, we are wrong. Okay, so now see, it closed below. After I see this candle, so maybe this trader now, this one might close this position. That is just normal trade idea. But this one now that entered since, it might just break even, break even, and it's still holding its position. So now this market came, reacted at this point, and now, so where's the next point of resistance? This is the next resistance zone we want to be taken out. So let this zone be taken out. Let this zone be broken before you can take venture in any of this trade again. So now let's continue. So now you see that this trader now broke even. As this broke even, being hit. So let's just say, okay, we can say that it has hit break even, but let's just say we put it at this, it was at this week. It was at this week. So maybe this one, or maybe when we get another slight sharp movement down, then we know that this position has been liquidated. But for now, it is still active. So now I can spot this counter trend because I'm trying to buy this market honestly. So this is a counter trend, this is selling, but in the overall trend is selling, but I've not gotten my real retracement to sell it from here. So at this point, I'm buying the market. So in all of this position is still active. So let's see if it finally got liquidated. So what are you seeing now? You saw that this was the kind of, this pattern is the kind of reversal pattern, came down. It's a kind of head and shoulder to some extent. This position is still active. Then you now saw this breakout. Is it really a breakout? Wait for the candle to close to know. First, this was a resistance. It reacted at this point. So, but what do we notice? That this our trend line has been broken at this point. Break, and then it retested it. So maybe this trader first is still waiting for a breakout from this zone. So this candle now, okay, let me put this here. So this zone now, this breakout, maybe this other conservative trader now has taken this trade at this re-entry and SL at this low, while this one is still in the position, and then maybe targeting this point and above. So now this makes sense. So the ultimate for this other trade setup at this point to be confirmed, market need to break these levels and break these levels as well. If market did not break this level, we are still going to spot out another trend. So this trend now, remember this trend has been, this was what validated this setup. So but let me delete this. So now we can now use a rising channel like this, because we can get some kind of reaction. So we can use this and see how market will react to this trend, but it's somehow far. Yes, we can use this, and then we can do something like this again. Okay, no, first one is okay. All right, so we play. So now you see we are adding confluences, trend lines and zones. So playing this now, let's see how it goes. So now what have you seen? You have seen a kind of breakout from this zone, but I don't like this breakout because of this rejection, because e no even close above here, right? So we want to get good reaction. So remember, this is the base trend line. If market break here, then market want to sell, we'll forget about this market. Then let's play it and see. So so you can see market broke out from this, but the next candle, what happened? It was reacting at this trend line. So you just see that this trend line, you just want to wait for good reaction at this trend line. So this, the second candle did not just drop, so you are still in this position. Why? Because this one, it broke down, but then this other candle, you just know that this point is a point of interest. This other candle now, you want to just wait for confirmation, because maybe if I use the weekly candle, check the weekly close bearish. So now after this candle close, this one, this other week did not close bearish, right? So that is why you are still in this trade, and then you want to see ultimately this breakout from this zone, so maybe we can adjust this a little bit to this point. Yes, so adjusting this to this point. So let's see if this will pull momentum to break this structure finally. Okay, so market reacted at this zone. So we can see that this is a breakout. This is finally a breakout from this zone. Can delete this now. Can delete this. Delete this. This position is still active. So this is the trend line I'm working with now. So now I can see that this makes sense, that this is a kind of breakout. This, okay, first I know that this one now market might react from here, gently, but this is a breakout from this zone. This is the zone that interests me the most. So this makes sense that it has broken up. So from this now, what will I do? I know that this point I can use, this is the zone that was broken out. So maybe another trader can enter here, enter his position here, but this one will be a low risk to reward trade. It will be like this, and then this one maybe we want to target more. So I want to target these highs or this resistance. So let's see how it goes. This is a limit order. Market need to come down, activate, then go up. So you can see market did not even activate this guy. So this one, we delete this one. So what happened now? See this trend. 1, 2, 3 touches. So now, can we spot any other thing? We can delete this, or maybe, yes, we can delete this because market has changed motion, and then we can now draw this, because this is a support for this, and then we watch for how price will react at this point. And then see this point, you have taken partials at this point, and then ultimately you want to take your trade here to this point. So now notice, see this point, so price might likely not come back to this point. So maybe if price want to come back to this point, this retest zone, so maybe this point might be your SL. Then you are targeting this point. Why are we putting this? Because this point might hold, this resistance point might hold price a little bit down, and which we can use this to scale our position. So let's see. But now you see what happened. Market will not come down for this again. I just see it. So what happened? Now market now reacted at this zone, at this trend line. So you see now, if we had left this trend line here, you see it should have not been relevant for us. But see this trend line now. So the goal of this is to think how other traders are thinking, to think how the traders that move the market they are thinking. That's how you do this analysis. So maybe if those traders are doing this, that means it will be in our best interest, because we are doing what they are doing, and now we can now scale in our position the same way they are doing. Just as simple as that. So now see this trend line now is holding price. So now we can see that market has finally broken out from this resistive zone. This is the target. So maybe you just want to just enter another position with greed. You can use this retest zone. So maybe you use this zone, and then your SL at this low, and then it is not a trade for you to take. So one is to or maybe you want to take this one, taking it to this next resistance, and then it might make sense. Then let's say it goes. Market did not even activate you, right? Breakout and retest, market did not activate you. So but then market has broken this again. So now this is a major support. I'm sorry, yes, this is a major resistance zone. And in the 1 week, this is what you want to get. This is the breakout you want to get, because this is a consolidating range. Market has finally broken out from this range. Makes sense. So in any way, as market has broken out, just wait for a test. Even though you do not retest, just wait for a test at this zone. Then you can take it to this point, then take it to this point to follow this overall trend now. So this is how you trade. This is even all this trade now, they are just impulsive trade. If you want to wait and take good quality trade setup, you might wait for this. But you see that all of this now, they made sense because we were adding some confluences, trend line and stuffs like that, and it was making sense. But now if we had waited for this breakout, then you wait for a test to take this trade up. So let's look how we can take advantage of this opportunity now. So let's play. So you can see the breakout is strong. Maybe 1 week, let's see. Okay, so let's see if the market will retest, come back to retest the zone. So now we are watching at this reaction, because this might be the retest, because this is a kind of, from what I'm seeing, it's a pressure zone, it's a kind of demand zone. It can hold this price up. So now a trader will wait for an engulfing above here, sharp. So what do you see now? After this candle close, as simple as that, this is what we call quality. All of this might fail, but this will likely not fail like just easily. So you take this trade, your SL will be here. Sometimes your SL might be here sef at this zone. Yeah, sometimes your SL might be here, sometimes your SL might be at this candle, because likely anytime you see this, market will likely come back to this low like this. But let's just put it here, and let's put it to this candle, to this candle, to this point of interest now. So this is a good trade setup from all of this. This is one of the best trade setup from all of this. So without much, I just know that this might likely hold. So just know where you're putting your take profit. So this might likely hold. This is 1,000 pips. This is what you want to catch. This is what you want to catch in the market. Okay, so one day, let's drive it. So this is a kind of breakout. Market might come and retest, but now we expect that market should fly. Let's see how it goes. So now what happened? Market came, retest, you're in your position. Oh, you can see these guys, you can see these guys, you can see these guys. So see, this position was liquidated. It was liquidated. So it was liquidated. What do? You do not rush the trade, you wait. So now looking at this overall time frame, see, that's why you don't neglect, you don't neglect your analysis. You want to pay attention to other factors, other confluence that might cause, you know that might change perspective of your trading. So we were just focused in one day. So remember, this is what we did. When we saw this, we thought that this was a retest at this point, and then we took this trade so early. But if we had waited for a retest at this zone, you see, this was where it retested now at this zone. So now at this zone from the higher time frame, won't be, because some point this does not make sense for retest, but it makes sense because sometimes market will, market just do the same. Made sense. So let's say we waited for this retest. How can we take this trade now? Now we'll take this trade from this point. This is the bullish engulfing we would have used, then below the zone, and then we are targeting maybe any of these highs. Then now let's say it goes. So now this is how we would have taken this trade. So we use the 1 week, just between your market from the 1 week. Now it has broken. This is a zone. Market might react from here, but it might overpower here because it has overpowered so many things. So you see, it's just going. This is a zone of interest. That's why it's reacting like this. So now you are waiting for this zone. If you still see much, okay, now what is this? You have seen all of this. Only this is something to tell you that Be very careful. So now notice notice that this point is a point of interest, this line, but now market has not reached there well, but then know that you are still counter trending, you are buying in an overall selling market and market has retraced to some point. So maybe at this point or at this consolidation, maybe at this point, this is 1 week, let's see daily. Maybe at this point where you see this rejection went up and you now see this one engulf down, you might close this your position and you just rest. Don't worry, another opportunity will come. Close this position here at this point. Then instead of you acquiring this loss, or if you want to hold the position, you can just close your eye and just hold the position. Leave your SL, don't break even. Just leave your SL because this zone is might be protected. So let's see how it goes. So now from this point now, this is what we call double top. I mean double bottom. So this is what might happen from this point. So this is 1 week. So you remember this is your SL. Your SL is below here. So did it kick us? So below this line. So maybe this position was liquidated, right? It was liquidated. We were out of this position. So but notice now, market is still reacting at this point. So maybe you just know that the market is changing direction. So this is a kind of head and shoulder pattern. You just want to wait and see what market is doing. So at this point, you see that there was a breakout of this kind of neckline. There was a breakout. So you know that okay, this is really holding price down. This is holding price down. Could that be the retracement? How do you know if that is the retracement? You add other confluences. So now this is the point. This might not be reached now. So what do you do now? You add other confluences. You try to draw your trend line. Maybe you just draw it at this point to see if there will be a kind of there might be a breakout to the upside. Okay, yes, this is head and shoulder. If market breaks this and pull up, that means you want to come for this, but if market did not break any of these points, react from this point, know that it is dropping right here. So that is basic understanding. So let's see. So now this is 1 week. Let's see. This is a trend line. So you can see this is a kind of breakout retest. But now you don't want to take buy straight now. You just want to wait for a good retracement, maybe a head and shoulder pattern to know what to do. Then you are just waiting. So now you can see all of this consolidation. So now see what is happening. 1 week. No, in 1 week you want to wait. Let's see how this candle will close. Okay, so you can see this. You want to get good bearish bias. So you can move this to this point now. So now this is good trade. Maybe if you get good reaction at this point below this red line, and at this point you might take this trade for a sell to this point, and then to this point first and then to somewhere down. But let's see if market will trade below this trend line and below this red line. So now you see market has reacted at that point. You want to wait and see if market will engulf below. If market engulfs below, we'll take this trade for a sell to this point. So market failed to engulf well, rejected, but we have not gotten any engulfing at this point now. This is the point we are waiting for. This low, the kind of engulfing below that point. So that candle is not even close like that. Okay, so this candle now that have closed, you can take this trade for a sell. Let's put it above here. Then we are taking it to this point. Let's see. At this point now, you have broken even to this point. Why Why? Because of all of this strong momentum, right? So to reduce your risks. So you see this break even. So notice this point now. This point is a support point. So maybe you might take partials at this point. If you take partials at this point, you are doing yourself much good. Then you allow the position to run down to this point. So see as it's reacting at that point. So maybe now as you see this, you break even to this point. You carry your SL down to this point here, to this point. So now this is a breakout from this zone. It made sense, but now your SL is at this point. So let's see. So you see your SL was slammed. Your SL was slammed. And then all of this consolidation, you can just see the consolidation is reacting, trying, it has failed to come to this point, but this is still valid, but it has failed to come to this point. So now this is 1 week. 1 month, what is 1 month saying? 1 month is saying that market is likely heading for this. So let's see if market will come to this. Then we use, where is the other point of interest? This point is a point of interest. So let's see how market will react to this red line, this one first, or this one, or this one. But this, if market come here, it will make sense for year and year. So let's see how it goes. So now notice what market is doing. It's ranging in this zone. You can mark out this zone like this. Wait for breakout up or down. Okay, now see, market has traded into first one of our area of interest here. You want to wait first. Okay, so this is trading, this is trading, this is trading, this is what trading is. This is what trading is. This is your zone now. This is your level. Red line, this trend line. So let's see how it goes. Will it break it? We are watching. So now you see this 1 week. First of all, market traded to this zone. You see 1 week rejected. This one engulf. A risk entry trader has taken this trade already from this, like from 1 day 4 hours. A risk trader, okay, this is how you to take it. This is a good trade setup. It has taken it from me already because it has traded to your zone of interest, right? SL here, targeting this point. This is 13 arrow. You risk $10, you're making $130. Risk $100, you're making $1,300. So now let's play. Let's see how it goes. So you can see the market is dancing towards our direction, and I tell you the truth, it's likely going to go to our direction because it reacted at this zone. This is confluence, multiple confluences. This is how you take your trade. You continue. So now you see, so maybe one day you want to do scaling, you want to add scaling to your position. You do this broke out, you add a ready position, and then you have modified your break even to this point that retested, and then you enter this position. Your SL is at this point, and then you are targeting this low. This is trading. This is like patient trading. So when you now see this now, boom, you are in good profit. So you play. Let's see how it goes. So you see, so now this is what we can do again. So remember, this is our stop. If you hit it, then we know we are out. So see what market did. Market is ranging at this zone. It's ranging at this zone. It's ranging at this zone. This zone, this red line, this trend line. See, so from here, market is heading down. So you see, we're not to be greedy with this SL point. We just put it as this red line a little bit above because of inducement. So now you can even draw this trend line. This one, you wait for this to test, add another position. But this is all risky, so you don't need to be adding positions like this. You just need to allow the ones you have had run. But you see, this trade is just high probability because of this. That's why you can just do some of this. So when you just play, just write to point of interest. So first, you are taking partials at this point. In this red line, you are taking partials at this point. So partials, first partials, you are taking partials. So this is what I mean by partials. Close 50% of this, 50%, 50% of this. You're taking it, you're taking it, you're taking it, you're taking it. Taking it, taking it, taking it, taking it. It will take long, but finally, see, you take another partials here, or you just leave it, and then you see your TP has been hit. So now this is 11 arrow, 6 arrow, and 23 arrow, but not 23 arrow obviously, because when you enter the trade, your SL was at this point. So this is like 10, 20, 30, like 30 arrow. So taking partials, let's say 30 arrow will give you like maybe 20 something arrow, maybe 23 arrow or so. So you can see, guys, you can see this is how you trade. What do you learn from this? You learn patience, confirmation, focus on quality instead of quantity, allow for market to come to you, and then you now apply your entry models, right? So now we have examined how we can use trend line, support and resistance, and how we can also mark out our horizontal support and resistance, and we wait for market to come to us, right? Always wait for market to come to you. Don't rush the market, because if you rush the market, you are just hurting yourself and you just be restless. When you realize that you are trading outside of your plan, you'll just be restless. So just allow the market to come to you, mark out your zones, allow the market to come to you. That's just what you need to do. So applying this into current market, we have this zone. If you close above, this is the next zone of interest. Narrow it down 1 week, you can see. So narrow it down 1 day, you can see this. So you can draw your trend line. So you can have it like this. If market breaks this trend line to retest, it might likely come and retest this zone, because what this was retested. This zone, see, this zone was broken out from here. So now you can add something like this. So this is trend line. So now adding this, go to the 4 hour. So you can see this made sense now. So now see this red line at this point. Now this is a point of interest. So the market might react. If market break from this point, react, this is a kind of resistance. It's a kind of resistance. So if market reacts from a breaks, to just go down. Okay, let's just say breaks, to react then to somewhere at this point. But I want to wait for reaction at this point, because this is a kind of retest, right? It's a kind of retest at this zone. Then if you are buying it, you are buying this market ultimately to this point. Yeah, it makes sense. Or if this market breaks above here, then just want to wait for maybe kind of retest, and the market might not ultimately ride up, because if market breaks there, if you look at the 1 week or the 1 month, maybe if this market should break up, that means it might likely retest, come down to retest. So as it's coming back to retest, you're looking for good entries. Maybe that is when you want to look for good entries to buy it ultimately to this point. Alright guys, so that's where we come to the end of this video. So I hope you can now draw good trend lines, and as well add it with your horizontal resistance and your support to determine price movement. Right, so thank you very much. See you in the next phase. So in the next video, we'll be looking at chart patterns. Yeah, chart patterns. All right, so make sure you subscribe, you drop a comment, you like this video, and then see you over in the next video. Thank you very much.